So I'm sure all of you guys know by now that, of course, Twitter has accepted an offer from Elon Musk to purchase the company and take it private at over $54 a share, which from today's prices, that represents more than 20% upside on the stock. So that begs the question, should we be moving in here and buy some Twitter stock and hold it and wait for that deal to close because we'd be able to make a super easy, really quick 20% profit on it? Or is there still just too much risk here that the deal actually gets canceled and then we'd be left holding on to Twitter stock after a sudden crash? And if that were to happen, would that be something worth holding on to long term and waiting for a recovery to happen in the stock? There's a lot of good questions here. I'm going to share my opinion on all of it in today's video. It's going to be a fun one. Hope you guys enjoy it. Let's get started. What's up, everyone? My name is Ale. Welcome back to my world of stocks. Okay, let's go ahead and start here by talking about what the deal looks like and how likely it is to actually go through. Then we'll also talk a little bit about Twitter itself and whether or not that's worth owning or holding on to and taking a gamble on if the deal actually does not go through and it gets canceled. Let's cover all of that right now. Let's jump into it. All right, so let me just quickly catch you guys up on where we're at here. So first of all, Twitter is an extremely volatile stock and it was struggling greatly up until 2016 when all the political drama skyrocketed on the platform thanks to the whole kind of Trump era or whatever you want to call that, which breathed new life into the platform. People flooded to Twitter to either defend or heavily criticize the new president, which was fueled even further by the pandemic of 2020, where the arguing and fighting between factions only intensified on issues like lockdowns, masks, the V shot, and more. And if there's one thing that we know about these social media companies, it's that anger and fighting and division is exactly what these giant corporations want because it means more time that users are spending on their platform, which attracts advertisers, which raises advertising rates because those advertisers have to compete with each other for ad time, and all of that ends up making these social media companies a boatload of money. As a result, Twitter stock went through two primary growth spurts. The first was around 2017, 2018. And the other was during the 2020 pandemic, where it soared to a giant high of over $73 a share. However, coming off of that, as the world started opening back up, which meant people going back outside and spending less time glued to their phones arguing about political, health, or social topics, and because Twitter was accused of maybe censoring or even banning certain people, there just wasn't as strong of engagement happening on the platform to really save them during a downturn. And so as a result, investors became worried that the platform would go back to struggling in the coming years, and they sold out of the stock in panic, causing it to crash all the way down to just around $30 a share. And there's other reasons for this. Of course, the market itself has been very volatile, but you kind of get the idea. And then came Elon Musk after all of this, the super rich billionaire that offered to flat out buy the company and take it private in order to restore free speech and end all of the censorship that, in my opinion, was actually hurting their business. And in order to do that, he offered to pay anyone that owns the stock a very substantial $54.20 per each one of those shares. As a result, the stock skyrocketed once again, at one point passing the $50 mark before correcting back down to the mid to high $40 range, which is where they sit today. And so from today's levels of about 45 bucks a share up to the 54.20 that Musk offered, that would be an increase in value of over 20%, which begs the question, how likely is it that the deal goes through, we actually receive that money if we buy the stock, and what is the downside risk if things go bad? Well, as of right now, the Twitter board of directors have already accepted Elon's offer to buy the company for $44 billion. And again, each shareholder would receive $54.20 per share. However, there's a few hurdles and different ways that the deal can actually fall through, and there are four in particular that I feel cause the most risk. So I'm going to run through each of those right now and give each of them a ranking of either very likely, likely, 50-50, unlikely, or very unlikely based on my own opinion of each. So first up, I would say that there's timing. Now the deal needs to be completed and finalized by October 24th, although it can actually be extended for another 6 months under certain conditions. But if it doesn't generally meet that deadline, then the deal would be forcefully canceled. And for me, I'd give this a very unlikely rating. I just can't see a scenario where the deal falls through only because of time, where they couldn't get, paperwork or anything else filed on time. Seems super unlikely to me. These are wealthy, very wealthy parties that are being guided by giant financial institutions like Goldman Sachs, JP Morgan, Bank of America, and Morgan Stanley, just to name a few. So, not being able to meet a certain time related deadline, that seems absolutely absurd to me, and I gotta give that a very unlikely rating. Another way that the deal can fall through, though, is if either Elon Musk or Twitter themselves simply change their minds and decide to pay a termination fee before the deal is finalized. And that could definitely happen. Now, under that scenario, whichever party decides to cancel would be forced to pay a $1 billion fine fee to the other party. So you could make the argument that at this point, both parties have thought this over, and it would be really dumb of them to cancel now and lose that giant amount of money just to get absolutely nothing in return, and to also have to give that money to the other party. That would be really bad. But I would also just remind you that Elon Musk is considered the richest person in the Western world, not counting maybe shadier people like in Asia or the Middle East, stuff like that. But just in the general kind of public sense, Elon is usually considered the richest with over $200 billion in net worth. So paying $1 billion fine, it'll sting, but he can definitely afford it. As for Twitter, well, they make billions of dollars in sales every year, so they could also pay it if they absolutely had to, but they also sometimes lose money on the bottom line, so it would definitely be, a decent sized setback for them, and they would take some heat for that. They definitely don't want to lose $1 billion. Overall, I'd say that either party would be pretty dumb to cancel at this point, but one scenario where I think it could actually happen is if the media and the public in general keep criticizing Twitter for taking the deal. I could see a scenario where they cave into public pressure, obviously more so from the left side of the political spectrum, but just to give into that and they end up kind of backing out, that is something that could happen. But again, I'd say that's unlikely at this point. I won't go as far as to say very unlikely because there's definitely a ton of people out there that hate the idea of Elon Musk buying Twitter. But at this point, if the board was going to decline the offer, I think they would have done it already and saved the $1 billion. Not likely to happen at this point. Moving on though to the third scenario, that would be if shareholders don't approve the deal, in which case, if a majority of shareholders decline it, then the deal could still be terminated. And like I just said before, there are definitely a lot of people that do not want to see this deal go through, but I highly doubt that those people are the largest shareholders that are getting paid a lot of money for it. In fact, a whopping 75% of Twitter stock is owned just by large mutual funds and institutional investors, and those types of groups are not likely to turn down a huge payday over political or social principle, because in terms of a profit, Elon's offer was almost 40% higher than where the stock was trading back when he first announced that he was investing in the company. And at that time, the stock was in a very downward trajectory. So if you're a shareholder and you've been seeing your stock continuously crash, and all of a sudden Elon Musk comes in and offers you a profit of around 40% or whatever, it's going to be very hard for you to say no to that. Also, keep in mind that these large stakeholders are the ones that basically choose the board of directors. So, considering that the board has already agreed to it themselves, it's very likely that the board chose the side that shareholders would also agree to. Of course, I could be wrong, and there's definitely been some large shareholders criticizing the deal. And like I said, there's been a lot of backlash by the corporate media and elsewhere that could sway their decisions. But overall, I would still give this a unlikely rating. And finally, the last thing that I feel has the potential of getting in the way of this deal is if regulators step in and block it themselves. And for that scenario, I just really don't see it happening. Now, we did already have the FTC come out and say that they are reviewing the buyout to see if they should launch a bigger investigation next month, but experts have already chimed in and said that a blocking of the deal is highly unlikely since there couldn't really be any antitrust or monopolistic violations by Elon Musk, since he only owns companies like Tesla and SpaceX who have literally nothing to do with social media. More recently, though, it was reported that the SEC is investigating Elon's disclosure of investing in the company, which he allegedly did about a week later than he was supposed to under SEC rules. But in my opinion, that's more of a legal battle between Musk and the SEC that may result in a fine rather than something that would flat out block the deal. Honestly, I've seen much larger deals with much more monopolistic practices go through, so I highly doubt this will be something to block the deal. Personally, I would rate this as very unlikely. So there you have it, guys. If you want my opinion on the deal going through, I've got four of the biggest scenarios ranked. Two of them I gave an unlikely rating, and the other two I gave a very unlikely rating. So overall, I'd say that the deal is most likely going to go through. I'd be very surprised if it doesn't. With that said, though, anything can happen, and both Musk and Twitter have questionable histories when it comes to transparency or changing their minds or doing something drastic that you wouldn't normally expect. For example, Twitter literally banned a United States president, and Elon Musk swooped in and joined the Twitter board of directors out of nowhere, only to later say F it and just flat out buy the company. I mean, if you ever had two parties that are unpredictable that would do something, crazy or very unexpected, this is about as crazy as it gets. So anything can happen with these kind of parties. But I'm sticking with my prediction, and I'd say that this is a pretty good gamble at this point. However, that doesn't change the fact that it's still a gamble. Sure, you've got over 20% upside on a very likely bet here, but if you get this wrong and the deal falls through, then you're left with a social media company that has a ton of issues. Not only have they banned or censored a ton of people, mostly from one side of the political aisle, so you're essentially alienating or at least angering a giant amount of your user base. Not only do you have a large amount of new platforms being created all the time, like Getter, Truth Social, Gab, and more. And a lot of them might be a joke. You might kind of laugh at them, but there's a lot of companies, or platforms being created here that are trying to copy Twitter and act as an alternative competition. That's not really a good sign for Twitter. On top of that, not only do you already have huge competition in the social media space just in general with giants like Google and Facebook, who, by the way, at any moment they could also launch a competitive platform just like Twitter. I would say that Twitter has probably one of the smallest competitive moats I've ever seen, in that their business can be so easily replicated. I mean, it's literally just posting text messages on the internet. I'm sure there's a ton of huge companies that could easily replicate that. And honestly, I'm pretty shocked that Google and Facebook don't. I don't see why they don't just create something that would be just like Twitter. They definitely should. I guess Facebook is kind of like that, but anyway, there's competition. My point is that there's competition there, and there could be more in the future. And as if all of that wasn't enough, on top of all of this, Twitter themselves have lacked any kind of innovation, any kind of vision. They seem to never listen to their user base. They seem to never give them the features that they want. And while I do think that their financials are pretty solid, I just don't think it's enough to justify the valuation of like a 55 forward P ratio, which is, by the way, even higher than Amazon, believe it or not, or the long-term concerns of rising competition. Now, just to quickly touch on those financials, though, in the last 2 years, they saw negative net income, so they were actually losing money. But that's not really a huge concern for me, because over time, this should actually be a very profitable business. It's such a simple concept of just posting text messages on the internet that you gotta believe at some point the whole thing would just be run by algorithms with huge profit margins. And meanwhile, sales are climbing by double-digit percentages in most years, so I think there's a lot to like. But again, for me, there's just too many concerns here that I just ran through. I think making a short term bet on a deal that is very likely to go through with more than 20% upside on it is a very compelling proposition. And I think it's a much safer bet than if you were to just go to the casino and gamble your money that way. So overall, I think it's actually a pretty good bet, but that doesn't mean that it's a bet that is worth making. I personally don't believe in Twitter's future. I just really don't. You can agree with the way Twitter is being run. You can agree with all their policies. I'm not giving any kind of political or social opinion on any of that. I'm just looking at it from a business standpoint. And I don't feel that Twitter is being run wisely or successfully for the long term. Now, if Elon Musk was controlling the company, then I'd have a different opinion, because I like the way that he's run Tesla. I think he's very innovative. I think he has good ideas. And he seems to want a more open, free speech approach to Twitter. He might be lying, whatever. We can all have our different opinions on that, and whether free speech is even an issue on Twitter. We can all have our own opinions on all of that stuff. But I just think that he would have a more business friendly approach to the way Twitter would be run. And I think he would do a better job. I'm not saying Twitter is going to go away as a company. I'm not saying that they have to fail. They can still do very well for the long term. But I don't have a lot of faith in them myself. I think I'd rather have my money in other companies. I'd rather invest my money in other stocks than something like Twitter, which I feel is kind of mediocre. So if I get this wrong and the deal actually gets canceled and the stock crashes, then I'm kind of screwed, because I would honestly sell at that point. It's not a company that I want to invest in long term. If it was, then I would make a big bet on this, but it's not. Having said that, keyword is big bet because I actually kind of want to make a very small bet on it because I do think that the deal is likely to go through, but not anything substantial. I might gamble a couple $100s on it because if I was to lose $200 on this bet, I'm not going to be devastated by it, but I'm definitely not going in and investing thousands of dollars on something that I just really don't believe in long term if things go south. But a couple $100, that seems kind of reasonable for me. So I might do that in the future. I'm still kind of 50-50 on it. I'm still kind of thinking about it, but maybe a couple $100, I might take a gamble on it. And if it falls through, hey, I can lose $200 and I'll still be fine. It's not a huge deal. Of course, I don't want to lose that money, but it could be a fun little bet and I can make a nice little profit on it. And then I can do something kind of cool with it. So anyway, that's just my opinion though. Of course, you guys do whatever you feel is best. Let me know down in the comment section. What are you doing? Are you taking a chance on this? Is it just not worth it for you? Do you think that there's just safer bets out there that you won't lose any sleep over and so you'd rather invest in those? Or do you feel that this is a very likely bet here and you'd want to just take a little gamble on it, maybe with a small amount, maybe with a substantial amount? But let me know down in the comment section what you're doing. And I'll try to respond to as many comments as I can. I'd love to hear your thoughts on it. But I hope you guys enjoyed the video. Please hit the like button if you did, and I will catch you in the next one. Hope you're all doing well. Take care. Bye-bye.